Good morning, dear students. Welcome to the online classes of Advanced IFRS and Practice. My name is Lakshman, lecturer in Department of Commerce, SPS College, Bantwal. As we have discussed in the last video, I am going to start with the unit first, that is IFRS dimensions in accounting practice. Let me give a small introduction about IFRS. IFRS stands for International Financial Reporting Standards. So these IFRS are designed as a common global language for business affairs. So this is a global language, or this is an international language for business affairs, so that the company accounts are understandable and comparable across international boundaries. So this IFRS which helps to the company to compare the business accounts or company accounts across international boundaries or across the continent or across the world. And they are the consequence of growing international shareholding and trade, and are particularly important for companies that have dealings in several countries. So some companies, they are having the dealings in several countries, like so many countries like America or China, like that. So they have the dealings in so many countries. So this IFRS which helps to them to they can grow their shares, they can grow their trade or business activity, right? So here the companies benefit from the IFRS because the investors are likely or more likely to put money into a company if the company's business practices are transparent or comparable, right? So or else understandable, right? And next one, it is a progress of replacing many different national accounting standards. So this IFRS is progressively replacing the many different national accounting standards. Usually the some countries, they are having or they are maintaining their own policy, their own system, their own principle to maintain the books of accounts. So this IFRS which replace them or replace the many different national accounting standards. So that's why they introduced International Financial Reporting Standard. And IFRS helps to maintain books of accounts which is comparable, understandable, reliable and relevant to the users, that is internal user and external users. So this IFRS which helps to maintain the books of accounts comparable, and it will be reliable and relevant to the users. Who are the users? Internal users and external users. Who are the internal users? People who are inside the company or inside the business entity, like owners, managers, employees. External users, people outside the business entity. Take for example suppliers, banks, customers, investors, potential investors, tax authorities. So this IFRS is which helps to maintain the books of accounts comparable and understandable, and which will be useful to the users of internal and external users of the books of account. Move forward. History of IFRS. What is the history of IFRS? IFRS originated in the European Union. So this is the originated in European Union. The intention, what is the intention of IFRS? The intention of IFRS is to make the business affairs and accounts accessible across the continent. I already told the main intention of IFRS is to compare, to understand the business affairs across international boundaries, right? So that is the main intention of IFRS. So the main intention of IFRS is to make the business comparable, to make the books of account understandable to the world or across the continent. This idea quickly spread globally as a common language, allowed greater communication worldwide. The goal of IFRS is to make international comparisons as easy as possible. So this IFRS, this information spread globally as a common language. So every country, they are using the IFRS system to make the books of account, right? To manage the books of account. So what is the goal of IFRS? The goal of IFRS is to make international comparison as easy as possible. So that is the main goal of IFRS. But this goal has not fully been achieved because US and some other countries, they don't use IFRS. So here the main goal of IFRS is to make international comparison of books of accounts, but this goal has not fully been achieved because US or United States, they are using the different kinds of different principles of different systems of accounting. They are using generally accepted accounting principles, but some countries they introduce the IFRS to maintain the books of accounts. That is a thing. Some countries use other standards, and US GAAP is different from Canadian GAAP. So here the United States generally accepted accounting principle is always different from Canadian generally accepted accounting principle. IFRS set common rules so that financial statements can be consistent, transparent and comparable around the world. So the IFRS they set some common rules, common principles so that financial statements can be consistent. So if you use the IFRS system, IFRS principles, your financials or your books of accounts can be consistent or transparent or comparable around the world. Next point, IFRS are issued by the International Accounting Standard Board, that is IASB. So these IFRS are issued by International Accounting Standard Board, and they specify how company must maintain and report their accounts, defining types of transactions and other events with financial impact. And these IFRS were established to create a common accounting language so that businesses and their financial statements can be consistent and reliable from company to company and country to country. And the IFRS are used at least 120 countries as of March 2008, including those in the European Union. So and many in Asia and South Africa, but the US uses generally accepted accounting principles. So in the world, only some countries are using the IFRS system, but United States of America they are using generally accepted accounting principle, because they believe that generally accepted accounting principle have been called the gold standard of living, which gives the right information, which gives the transparent information to the users of accounting. However, some argue that the global adoption of IFRS would save money on duplicative accounting work and the costs of analyzing and comparing companies internationally. So some people they argue that the global adoption of IFRS would save money. So that's why they are using the IFRS system, right, or IFRS principle. And here the international accounting standard are the older standard that IFRS replaced. IFRS are sometimes confused with the International Accounting Standard, that is IAS. So which are the older standard of IFRS replaced. So IAS was issued from 1973 to 2000, and the International Accounting Standard Board and replaced the International Accounting Standard Committee in 2001. So this is about an IFRS or history of IFRS. In the next class we will discuss about the scope and objective of IFRS. I hope these things or these meaning and history of an IFRS understood for everyone. Thank you.